Hey everyone, Adobe, the digital design company, is slated to report quarterly financial results on June 13th. Investors are curious if they should buy Adobe stock before earnings or after earnings, or if they should buy Adobe stock at all. So I'll preview what investors can expect from Adobe in its upcoming earnings release, and I'll answer if you should buy the stock before or after, or if you should buy the stock at all. So let's take a look. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, so in its latest financial update, which the company gave on March 14th, it said that revenue jumped to $5.18 billion, and that was up by 11% year over year. Operating income actually fell to $907 million, but I'm going to highlight one of the main reasons why operating income fell and why operating income is likely to jump higher in the next quarter. Similar story with cash flow from operations, which fell to $1.17 billion, but that same reason that caused operating income to fall also caused cash flow to fall, and that's likely to reverse course, and I'll share with you why that's the case. Remaining performance obligations, $17.58 billion. The company has roughly 1 year of revenue that's slated to turn, 1 year of remaining performance obligations that's slated to turn into revenue. The company's services can be purchased on contract terms, like a 1-year contract. And when you have a 1-year deal, Adobe cannot recognize that as revenue immediately. It charges you on a monthly basis, and then that goes into revenue in that quarter or month where it performs the service. So even if you pay up front, Adobe cannot recognize that as revenue until you consume that service as the year progresses. Interestingly, Adobe started a massive share buyback program in the latest quarter. They announced a new $25 billion share buyback program, and that signals usually that management feels the shares are undervalued. I've agreed with management for the most part. I've had Adobe stock rated as a buy for a long time now, and I last updated Adobe stock on April 15th here, reiterating my buy recommendation for Adobe stock. On April 15th, I last updated and recommended the stock as a buy. For the next quarter, Adobe is forecasting $5.25 to $5.3 billion in total revenue. That would be a slight increase from the previous quarter, where the company generated $5.18 billion in total revenue. The company is forecasting earnings per share of between $3.35 and $3.40 per share, and the company will continue buying back its shares most likely. Let me highlight why its profit was down in the first quarter and why that's likely to rebound. All right, so if you look at the company's latest quarterly income statement, you'll notice this line item here, the acquisition termination fee of $1 billion that they accounted in the latest quarter. Now, you might be wondering, what is this? What's an acquisition termination fee? So remember when Adobe tried to buy Figma and the deal didn't go through? That's what this is. Typically, when an acquirer makes an agreement to purchase a company, to acquire a company, there is an agreement in there that says, if this doesn't work out, you have to pay us a termination fee. Because the company that's getting acquired, they're going through significant hassle to open their books, to cooperate, to follow through and do all the due diligence that's associated with an acquisition. And then to have it fall through, that's a major disruption. And so the company that's getting acquired wants to have a fee there just in case things don't go through. Regulators don't always approve these mergers and acquisitions. And so they want to protect themselves. And when it doesn't go through, like in this case, $1 billion, it's a hefty fee. It's a hefty fee, to be sure, for the acquisition not going through. If you recall, NVIDIA had to pay a similar, even more expensive fee for its failed acquisition of, I believe it was ARM Holdings, when NVIDIA tried to acquire ARM Holdings. And so this is common. This happens quite often in the world of business. bigger companies or big companies, when they try to acquire each other, sometimes things fall through and the company has to pay a fee. Now, as an investor, if I was an Adobe investor, I would be happy that the deal didn't go through. I was not happy with the terms of the deal when it first came out. I felt that Adobe was paying a super premium valuation at the time for the acquisition. I thought they were paying too much. And so for the deal to fall through, I thought was neutral at the worst. They get off lightly here, only missing out on $1 billion, having to pay $1 billion to terminate the acquisition. So that's why in the next quarter and in the next few quarters, they will experience a jump in profitability, because this is not recurring, right? This only happens when the acquisition is terminated. It's not a regular part of its business. So this will be removed from future income statements. And so its operating income, let's say instead of being 907 million, if you were to add back that 1 billion to this total, it would have 1.9 billion in operating income. And then if you compared it to the year prior of 1.586 billion, it would have been a nice year-over-year increase. So if you look at the company's organic results, profitability increased as revenue increased. And this is impacting its cash flow from operations as well, because this was a cash expense. It actually had to pay Figma for the failed acquisition, the $1 billion. So that is money going out from Adobe to the company it failed to acquire. Longer term, if you look at Adobe's business, it has healthy profit margins, an operating profit margin of 34.97% in the most recent trailing 12-month period. And that's been rising nicely since 2015 from a little under 15%. And cash flow from operations was also rising nicely before taking a dip here down to 34%. And following the removal of that $1 billion acquisition fee, going forward, I wouldn't be surprised if its cash flow from operations jumps back higher as well. So it's a lucrative business model, strong profit margins, healthy double-digit growth, even though that growth rate is decelerating. The company is implementing artificial intelligence to make its software suite more accessible to a wider user base, all of which I think provides a nice tailwind to Adobe stock investors. Now, it is trading at a relatively cheap valuation. It's trading at a forward PE of 22.39. So you can understand all of the reasons why I had rated Adobe stock as a buy, and I still have Adobe stock rated as a buy. But if you were to ask me if you should buy the stock before earnings, before the company announces the earnings on June 13th, I would say no. Typically, I caution against buying stocks before earnings. And unless I feel a stock is so undervalued that even the higher risk associated with an earnings event, even though you're getting higher risk, I would still recommend buying if this company was so undervalued. I don't feel like Adobe is that much undervalued in order to jump ahead of the earnings results and buy. I think you can wait until after the earnings results come out. Even if the stock price jumps by 5, 10, 15%, I think there will still be room for new investors to come in. Now, that's not for sure. You might miss out. You are taking the risk that the company reports a blowout quarter and earnings and the stock price jumps by 30, 35%, and you missed out on those gains. But I would rather miss out on those gains than jump in ahead of earnings and have some disaster and then your valuation has fallen by a big magnitude. So I feel the risk versus reward favors waiting until after earnings results in most cases. And this is another one of those cases where I feel it's prudent to wait until after earnings. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.